Hey everybody, it's Seth and Paul of Everything Money Channel. We welcome you back in. I'm in Ohio. Paul is in beautiful Mexico in his mansion in Mexico. We want to talk about Plug stock, Plug Power. This is a fuel cell company, the battery company. The stock is tanking at the moment, Paul, and I want to get your insight on what's going on with this company. We will use our 8 pillars to look at the company. We will look at what's going on. This was a huge growth stock that's been exploding over the past year. And in the past couple of days, it has not. They're based in New York. And Paul, what are your thoughts on Plug? What's going on? How are you, my friend? You know I love you. What's going down?
I am wonderful. Now remember, everyone, we're here to look at Plug's fundamentals. I'm sure the charts and the momentum are a lot different. Right now, we're looking at fundamentals, and I want to talk about it from the fundamental standpoint. If you like trading, if you like momentum, if you like charts, we have Trader Mo for that. He's wonderful. He has a video every morning, basically around 9 a.m. Eastern time, where the Everything Money channel, where you can learn about all types of ways of making money. But if you look at the stock right here, Seth, if you could share my screen.
Yep.
The stock in April of last year was selling for $3. Now it's 52. Hit a high of 73. So somebody might tell me this is going to the moon, right, Seth?
Of course it was. I mean, I'm sure if we look on YouTube and in a lot of the past videos from other YouTube quote unquote experts, that this was absurdly going to the moon and you should put a bunch of money into it, right, Paul?
It's a $28 billion company that has $300 million in revenue. That's selling for 53 times revenue. Look at their financials in the last 10 years. 27 million to 230, right? You're like, holy cow, this is incredible. Let me show you something very impressive. You ready for this one, Seth? You ready for your mind to be blown?
You said you were going to surprise me, so let's get after it.
This is the lifetime chart. In 2000,
oh my God,
it hit $1,500 a share.
Come on.
All right, people. I'm going to drop the mic right now, and I'm going to go sit in the sun because this is my point. The second at first when you said the stock, I'm like, I don't want to do this. And all of a sudden I look at the chart, I'm like, I want to do the stock. Guys, this is exactly the point I'm trying to make. The only stocks I know of that did something like this and rebounded was Amazon. That's the only one I know of. Other than that, look at this. This was a company that was a $900 billion company in 2000. I don't know why, but I'm just looking at the chart here. There might be a reason why. Somebody's probably going to sit there and say, you morons, you don't know that this. Great. But I'm looking at this saying, what did they do in revenue back then? In 2001, they did $5.7 million in revenue. They have lost money. Let's see how many. Lost money. Let's go to the next decade. The current decade. Lost money. Let's go to their free cash flow. Every year was operating negative free because there's no free cash flow. Guys, this is hype. And guess what? It was hyped up big time in 2000. Is this possible? It was almost $1 trillion company in 2000. Is that even possible? Is there an error here? There has to be an error here. Max. Yeah, something's wrong here.
Go ahead.
They must have increased their shares outstanding or something like that. They were only this is weird. What is going on here? What is going on here, Seth? Number of shares outstanding. Oh, that's what it is. Look at their shares outstanding, Seth.
Oh my God.
They had 13 million 10 years ago. They have 237 million now. That's the biggest I've ever seen.
Yeah, this has to be the most colossal share off of all time. Talk about it. What does all that mean?
Wow. That was so, guys, what that means is, let's see what it was in 2001. In 2000, they had 4 million shares outstanding in 2000. They now have 237 million shares outstanding, which means if you owned one share in 2000, it currently buys you 1/55th of what it did before. That is why their stock is 1/30th the amount. This is incredible. This is why you avoid companies like this, guys. They just lose money and they're increasing their shares every single year and diluting you as investors. Fundamentally, this is not a good thing to look at. They're increasing their shares every single year. They're diluting their investors. They're telling you as an investor, hey, F off. We don't like, I mean, that's literally what they're doing. They're sitting there saying, we're going to screw our investors. When they issue shares at this pace, they are screwing their investors. This means that if you owned 10 shares of the company 5 years ago, 10 years ago, And sorry, there are 10 shares of the company outstanding, and you own one of them 10 years ago. You own 10% of the business. That same one share now is out of 150 shares or something like that. Now you own less than 1% of the business. They have diluted the heck out of you. This is why you should avoid the hype in a lot of situations for the long run. Do the hype in the short run. Go learn how to trade momentum and charts with Trader Mo. But when it comes to fundamentals, guys, look at this. This company had 30 times more shares, 30 times more stock price 20 years ago, and their market cap is only 4 times larger. This is unbelievable. This is absolutely incredible. This is absolutely incredible, Seth. I mean, do you see this? This is insane.
Paul, some people might be wondering what you're talking about. If they're so new to investing, they might not understand this. And this is my role, folks. I'm the idiot that's coming and bringing these to Paul, these questions to Paul. And Paul, while you were saying this, I'm looking at YouTube, what other YouTubers are saying. Just a month ago, Plug Stock, a rocket to the moon. Plug Stock update, 100% gains. Hurry and buy this. It's exploding, and we're all riding this. This will double.
If you look, they're right. A month ago, it was at 30. What's today's date? The 18th. A month ago, on the 19th. Actually, they're down from a month ago.
I mean, I guess theoretically this run-up does show, but so listen, I'm not opposed to people making predictions and definitely using momentum and day trading to make some money.
Absolutely.
But what are people like myself might be confused with, Paul?
There's a difference between a stock price and the company. And you have to sit there and realize that over long periods of time, the fundamentals of the company is what's going to drive the stock price. In short-term periods, though, the momentum will definitely be able to, there's a way to make money in the momentum. But right here, guys, just because the stock goes up a lot doesn't mean it's going to the moon. They're just telling you what you want to hear. I'm telling you what you need to hear. What you need to hear here is if you're buying this company on fundamentals, you need to just write me a check and give me all your money because you're going to be broke at some point. But if you want to sit there and learn how to trade and make money on momentum as well as fundamentals, join our Patreon because you will learn it from 2 really good momentum traders and fundamental guys, Trader Mo and I. There's ways to make money in all aspects of investing. I like fundamentals. It speaks to me. If that doesn't speak to you, fine. There might be other ways like charts and momentum that work for you. But for this company right here, the fundamentals do not work on this company at all. $307 million in revenue on a $28 billion market cap. Please just go research any other $25 to $30 billion company. In fact, Seth, talk and I will tell you exactly what those other ones are doing. So please speak and I will.
I agree, Paul. That number, those numbers don't mean much to me, but it sure sounds like just a little bit of, $300 million in revenue and worth 28. I mean, your company, just a holdings company with 20 people working for you guys, probably gets somewhere close to maybe half that or something. You're certainly not worth $14 billion. So these numbers are a little screwy. I mean, usually we would use our 8-pillar analysis, but when there's no PE and very little revenue, we certainly know it's not going to meet damn near any of these, Paul. So what else are you finding?
So I'm looking here and I'm looking for companies that have a market cap between 20 and 30 billion in the world. Out of 24,106 companies, there are 302. Now let's go see what they do in revenue. Are you ready? Add filter. Actually, let's just do this. Add metric. So we're going to add income statement, operating revenue. Let's do revenue, total revenue. How do we do this? Revenue. Let's just do this. Metric column, revenue, annual. Ready? Submit.
Okay, go on. Wow, look at this.
Let's export this. Export the data. And I'll show you out of the 302 companies, what their average revenue is for companies of this size and what their median is. So let me make this larger. What I did here was I took the average revenue of every company that has a $20 to $30 billion market cap. The average revenue was $15.9 billion. This company did $300 million. So 50 times more is the average. Now median. Median is the middle number of all these companies. 8 billion. So half the companies are over 8 billion, half the companies are less than 8 billion. Guys, this is obscenely overpriced. Obscenely overpriced. This is insane. I'm looking at this saying, if you believe that a company that generates revenue, forget if it generated profit of 300 million, I'd say it's too overpriced. This is generating revenue and it's not even generating a profit. So this is just crazy how insanely expensive this is, Seth. And if you believe in this fundamentally, then you don't understand fundamentals. Can you believe it from a standpoint of momentum and absolutely more power to you? Go make your money that way. But from a fundamental standpoint, this is absolutely terrible.
Yeah, Paul, we're going to see the comments below that you're just straight up wrong. This is a huge growth company. You don't get it. EVs are the future. What do you say to that before we even get to them?
I think that if you're saying that, you're not listening to me. I'm not saying that the company can't go to the moon, but it's not going to be because of fundamentals right now. You saw what it did in 2000. If I go back to 2000 and see all the .com companies that were changing the world, only one that I know of is selling for a way higher price that has made it worth the investment. That's Amazon. Are there others? I'm sure there are. But the Cisco's, the Intels, all these big companies of the world. Oh, Microsoft's higher than it was in 2000, but not enough to make up for it. It's just you're going to have to go through some pain before it. Even Amazon, it's at $3,500 a share now. It went from $107 to $6 a share before it went back up to $3,500. So you have to absorb a 94% loss before you were able to see the big gains. And trust me when I say, if you believe the hype going up, you will bail when the hype is going down. So just learn your method, learn what speaks to you, and stick with it. If it's fundamentals, awesome. For me, it's fundamentals and momentum. I don't do charts. Trader Mo is a chart expert. I do not do charts. So you decide how you want to do it.
If this resonates, you looking at the math and not the hype. A shocking look at Plug, Paul. I had no idea these numbers are so through the roof. Those shares outstanding and the amount of actual money they're pulling in at the moment. I know, Paul, you're a big fan of just letting companies, the companies that are the EV companies, letting them be great companies for a few years before you buy in. You're probably not going to get that huge reward with that huge risk of buying some of these companies when they literally don't make any money at all. But yeah, if this resonates with you, sticking to the standards and giving a process, we want you guys to trust this process that we're teaching here on the channel and on our Patreon channel to move forward in your investing and to move your investing knowledge and just be more knowledgeable about what you're getting your money into. So if this resonates, join our Patreon. The link is below in the description. You can join our Patreon. There's 3 tiers. You get access to Paul in the top tiers. You get access to Paul and Mo in the middle tier. You get trading advice, momentum trading. You can see all of our portfolios, the 30 stocks that Paul owns, the 30 stocks that I own, and what we think are 30 great ones. And the community is incredible. So if you, like I said, if you feel like you are alone in this process of investing, join our Patreon. You can talk to people all over the world, get a bunch of advice on your moves. And again, we're not selling hype, we're selling math. And so if you're interested in these numbers, we welcome you in. 2 of our patrons will get Teslas when we hit 50,000 and 100,000 subscribers. So 2 of our patrons will be driving brand new Tesla Model 3s, and that will be swiped out of the credit card of Uncle Paul's wallet. So yeah, we appreciate you guys. Make sure you tickle the thumbs up, and we love you. We'll see you at our next video. 20 videos a week, 2 live streams. Join us. We'd love to have you as a subscriber on the Everything Money channel. For Paul and Seth, see you guys. Love you.